All right. Hey, everybody. Should be good to go. Thanks, Mirza. Appreciate that. I hope all of y'all are having a good trading day so far today. As always, normally during these room sessions, we'll walk through our charts here. I'm more than happy to answer, discuss the market, of course, and then from there, happy to answer any questions that you guys have around the market, whether it's about a symbol, a strategy, maybe a trade setup that you want my 2 cents on, or if it's about an indicator, anything at all, more than happy to answer it. And if for whatever reason, right, it's an answer that may elude me, like if it's something specific about futures, I am more than happy to point you in the right direction to try and find that answer. So please feel free to ask away. Hey, Omer, good to see you. And let's go ahead and get started with SPX, starting off with that. So let me just rearrange this really quickly. There we go. We can also talk about the $500 challenge trade we just put on. And then Alberlin's asking where we see near-term lows for Qs. We can definitely take a look at that. Pull up some intraday charts on top of the daily. And then Microsoft, we can certainly look at that one too, Marcus. But let's start with SPX here, talk about what's been going on with that, and then we will move on to some of these other trade ideas. So starting with SPX, from an intraday perspective, overall, we opened a little bit higher than the close yesterday. We closed right just shy of 4,500. So sometimes what happens is when you get a really good run like we got yesterday, and it's going into a bigger psychological level like we see here at 4,500, what can happen is we stayed just shy of it the trading day running up into that range. And then the next trading day, it's not uncommon if the trend remains the same, in this case, a bullish trend, that we get a slight pop above 4,500 with the idea that, we maybe struggled a little bit to get past it yesterday, but at the open, we had enough strength and overnight energy to break above it. It's not uncommon then to go down and test it just to confirm it's holding as support. And if it can hold, right, then that's a good sign for the bulls to continue to stay long, if you will. And that's exactly what we saw this morning. We had a slight gap above that level, went down literally within the first 5 minutes of market to go and test it, right in that range. We held, bounced up, tried to move a bit higher into 45.20, got a little bit of stalling there, pulled back, broke a tiny bit of 4,500, but you can see we basically were just going right into 10-minute support of the 30-period simple and the ATR trailing stop. Both of that did a really good job of holding up this morning, basically maintained that 4,500 level, and now we're getting our second bounce, which I'd be playing. If I was long currently on the index, I'd be playing it back up towards 45.20. You can see from a momentum perspective on the smaller time frames, right, that simple pullback that we had earlier today allowed the momentum to get a nice reset. So now there's room to build up that strength again. We're trying to get a bullish signal here in the compound breakout tool. So that's good to see on the 5-minute chart. We do have a little bit of resistance, though, around that 45.20 range. The ATR trailing stop is at 45.22. Of course, we have a psychological level at 45.25 we want to be mindful of. But of course, things can change pretty quickly on a 5-minute chart compared to like a daily chart, right? So I wouldn't be too surprised if we went up into that range, and if this bullish strength on our other time frames holds up, that we would likely try and break above it for the day. On a daily chart aspect, the one thing to really be mindful of here is the ATR trailing stop we're running into at this point, and that's at 45.37. So I don't know if I'd play the day much higher than that in regards of where our high could take us. You can see momentum's had a great reset towards the zero line. We still have a valid bullish signal from the other day on the compound breakout tool, so that was telling you that we'd probably go up and test resistance. Yesterday, we went up and tested the 30, broke it. It remained valid, so that's a good sign that we'll now go up and test the ATR trailing stop, right? And if we break above the 8 ER trailing stop and turn that into support with the blue dots, and this remains valid, then it turns into a more bullish trend signal to the upside. So that's what we'll kind of wanna keep an eye out for if that's a possibility. We do have a daily squeeze in play. We do have some great recent true lows on SPX on the daily chart. So if we can start to break above this range, I certainly like the idea that we'll go back up to 4,600. If not, maybe continue the bullish sentiment higher. Um, Overall, we knew on the weekly chart perspective and yeah, absolutely, we'll take a look at the cues right after FTX. Hello, that's not a problem. I'm sorry if I butchered your name, let me know if I did, so I can say it correctly next time. Um we can see here, we knew that we were inevitably due for a pullback or at least some top, right? Because we were at weekly exhaustion levels, and so we needed momentum to kind of get at least some sort of reset, and so far it's had a decent pullback. The pullback signal that we have printing on the compound breakout tool, that's attempting to cancel out this week, so that certainly will either go back into a more consolidating or bullish signal if that remains valid into Friday. So that certainly helps out the bulls more than the bears. You can see the Bollinger Bands are starting to open to the upside. So they're already anticipating on a weekly chart a continuation higher and they're making room for it. That's a good sign that we could likely break above the 4,600 level. And so we'll see. Personally, I would still be mindful of 4,600 just because there is still a bit of room left for momentum to reset. So if we test that range stall and start to pull back, we could just be in a slightly wider range of chop while that momentum is pulling back closer to the zero line. Now, the one thing to point out, I know we've talked about this in here before, but for anyone who's on the mic new, maybe listening, um, for the indexes in particular on a weekly chart for momentum, sometimes you don't get a full reset to the zero line when you're really trying to get going into a trend move again, right? A trending market. Sometimes what happens is you'll barely pull back like this, and then you'll start to pick up on green bars to retest the top of the axis, pull back, pick up on green bars, pull back, kind of like what we saw here. And when that happens, that's usually a good sign that the bullish trend, in this case, right, it's bullish. The bullish trend is trying to maintain the course, and those pullbacks, usually from a weekly perspective, go into something like the 10 period simple every now and then for a deeper pullback towards the 30, like you see here. But whenever you get into that range, test and holds, if everything is still trying to hold up well, right, then it's a place to re enter and keep playing to the long side. So I, you know, I don't want to say it feels like because I want to be mindful of the technicals and play off those solely. But from my experience trading the market, right, it looks like that is what we could be getting into here on the weekly chart perspective, where we don't actually get a full reset to the zero line, we just get many pullbacks on momentum and things keep trying to go to the upside. Now, obviously, that could change. That's part of the reason I want to be mindful ultimately of the 4,600 level from a bigger picture perspective. But I do like how we're starting to pick up here and bounce off of this bullish sentiment. Another thing to keep in mind, too, is next week we do have a market holiday, right? With the US markets, it is Labor Day weekend. So, what typically happens going into and coming out of a market holiday weekend like we're about to experience is it's not uncommon for the volume to get lighter going into the end of this week as we get into the market holiday and a little bit lighter coming out of the market holiday. So early next week, Tuesday and Wednesday, it wouldn't be too surprising if that volume is a bit lighter than normal. The second thing that is not uncommon when we get into a market holiday week is if we're in an overall bullish trend for the market to either chop or continue that bullish path to the upside ultimately, right? Now it's typically on lighter volume, so you want to be mindful of that, which is sometimes where that chop comes in, that smaller daily range, if you will. But the reason why this happens is because, of course, a lot of the hedge funds, the big boys, they like to take their vacation days around those market holidays, right? Kind of extend it out a bit. So because of that, just be aware that we might continue with this bullish sentiment through next week. Great strategies to consider through a holiday weekend like this are things that can benefit from theta decay. right? Credit spreads, unbalanced butterflies. And the reason why is because that way you don't have the market necessarily moving against you, but obviously you still have the days passing in your favor, right? So, for example, Monday, the market's not open. So the actual underlying price can't necessarily move against you in that day, but the day is still being passed, meaning the theta decay, the extrinsic value, is still taking effect through the 3-day weekend. So sometimes that can be beneficial for trades that if you're looking at them out into next week, you might consider more theta decay style trades to take advantage of that happening. And Jane, it probably wasn't me who talked about the cup and handle chart. If you're talking about what we've discussed in the past, maybe over in the small account mentorship room, Cody, I know, was looking at a cup and handle pattern. And I can't remember his levels. I'd have to go back and ask him. Thankfully, if you are in the small account mentorship, we do have a dual session later today at 1. So this is absolutely something I will make sure Cody talks about in there and we can talk about together. But yeah, I'd have to go back and look at my notes to see. Because I remember writing it down somewhere where that level was that he was looking at for the cup and handle pattern, but I could not. I don't want to speak for him necessarily and then get it wrong. So I will take a closer look at that and we can find out certainly. But I do know right now with this bounce up, it looks good, right? I think, like I said, I don't want to speak for him. He'll definitely clear up the thoughts later today at 1:00 Central. But I want to say that this bounce up is helping with that bullish aspect of it continuing to bounce and continue higher. So and I do think, Jane, that the pullback that he was looking for, that the recent pullback that we had is part of the handle move. So the fact that we held, we're bouncing back up. That's why I think he's likely to be looking at it from a bit more of a bullish sentiment if that cup and handle pattern is working out the way he's looking for it to. So there is that. Let's go on now. We'll pull up the cues here and we'll talk about that. So overall, the cues, similar situation, right? That we know that we are at weekly exhaustion for that in NDX. We very much like SPX was. We had the pullback. We started to print some great true low signals. The last time we had true lows on the daily chart for the cues, you can see this was an excellent spot to buy in at, both for a short-term run as well as for the bigger picture point of view, right? If you had just bought in like leaps here or some shares on the cues, I mean, you went up almost 100 points higher, right, from that move. Now, I'm not saying that's necessarily going to happen again here, but as we get going into this bullish trend again, after all the selling that we had last year, not a bad spot to have considered to buy in. And, personally, I still think there's room that you can play this higher. Usually on the true low signal, as long as you give yourself enough time, usually you can catch a part of that bigger run, even if you don't jump in right when the signal prints. Now, a few things to be mindful of if you were necessarily to go long here. One, we're battling right now the ATR trailing stop, right? We're attempting to break it, but we haven't confirmed the break yet. We'll see if we're able to do it today into the close. Bollinger Bands, depending on the pressure that the price is going to put on them, they're either going to flatten back out if we continue to hold resistance, or we'll actually see that break to the upside, which will likely, what we already started to see here, which is force the Bollinger Bands to flare open and in turn continue that move to the upside. We do have a low compression squeeze starting to build in here. Momentum is still below the zero line, so we want to see that cross above it. Hey, Space Junk, good to see you. So we do want to see a cross above the zero line for that bullish sentiment. We still have a choppy signal in the compound breakout tool. And then, of course, we have price resistance, just like we do at that 4,600 level for SPX. For the Qs, I would argue it's anywhere between 385 to 388, right in that range, just shy of 390. So if we can really start to break above that, that looks good for this just being a pullback move and a bullish trend. And then we're getting going again, trying to move to the upside here. So I like everything I'm seeing there as of right now. Right? No action I would necessarily take. Now, as for a pullback, because I know that's what Evelyn was asking, what do we see for near term low? Well, from a daily perspective, a pullback into the 30 at 371 wouldn't be out of the question. If it holds that, I would say, once again, that's a better sign for bulls than bears. From an intraday perspective, let's go to something like the 4-hour chart, and then we can look at the hourly as well. Get this to load up here for us. There we go. So from a 4-hour chart perspective, we have started to break above the 100, which is once again a good sign for bulls. Notice that 100 period simples around 370.88, right by that 371 level. So that, Evelyn, I'd say is a pretty good pullback spot. If we were to move back down and test it holds, then that could be considered a place for re-entry. But keep in mind on these moves, one, the 4-hour squeeze is just starting to fire. So we know there's a lot of energy behind this bounce up. And if we are able to break above daily resistance, we could just keep going, right? And the second reason why we could keep going without necessarily getting, a quick pullback, which would be ideal for us to get long on, is the fact that momentum is just crossing above the zero line and has plenty of room to the upside. So we're not at any sort of exhaustion level yet. We have energy from a squeeze firing. So we may not get, the nice pullback that we're looking for to re-enter on this trade. So just keep that in mind. But if we do, that 370 range, I would say is looking pretty solid right now between the multiple time frames. We'll take a quick look at the hourly chart too, see if that can confirm there. Yeah, Jane. And I would be more than happy to look at NDX on top of the Qs. I'm right there with you. I love trading NDX and SPX for those 0-day expirations in the cash settlement. So the Qs here, we are right at the 10, right? That arguably we consolidated into it held and it's starting to bounce. If it does break the 10, ATR trailing stop right by that 371 level. So 370, 371, I'd say is a pretty good pullback level, followed by 367, 365. So I hope that helps you out there, Evelyn. As for the Qs, let's take a look. I mean, as for NDX, let's take a look at that and the corresponding levels. And then I did not forget, we'll still take a look at Microsoft, of course, Marcus. And then, hey, the Fizz, good to see you. The Frizz. Hope you're doing well over there. Evelyn, of course, not a problem. So on NDX, of course, this is going to be a similar picture, right? We pulled back, started to get the Bollinger Bands to flatten out. That in combination with the true lows made for a good entry point. Certainly that was a sweet spot to jump in on when you have that pink triangle there, or same thing back here, right? That kind of the low of the pullback if you jumped in there to get long. We're bouncing up. We're attempting to break the ATR trailing stop, right? So same battle happening, same thing with the Bollinger Bands to be mindful of. In regards to the pullback level, though, instead of it being like that 370 range on NDX, I would say 15,239. So just shy of 15,240, right? That would be a nice support level that if it pulled back, held it, good entry to try and then jump into the long side again, or at the very least to play up into this resistance level, which is what we're battling currently. From a 4-hour perspective, because if you're looking at this for a 0-day expiration for today, let's take a look at those intraday levels. So from a 4-hour perspective, once again, a lot of room on momentum to continue higher. We're just starting to cross above the zero line. A 4-hour squeeze is just attempting to fire, so that helps us out. That 100 period simple is at 15,227. So I would say, anywhere between 15,200 to 240, 250. Doesn't seem like a bad spot of support. Now, similar situation though with the Qs, it is getting the squeeze to fire and it has plenty of room on momentum. So it may not get, a strong pullback. The pullback might happen on a smaller time frame, kind of like what it did on SPX here, where we just pulled back into the 10-minute support and then bounced. And from an hourly perspective, right, this is just walking to the upside right now. So, and then arguably here, right, we consolidated some into that 10 as support. It held. We're bouncing up. So we, like I said, we may not get that pullback, but if it does, even here on the hourly chart, the ATR trailing stop, which would be that next support if we broke 15,360, which is the 10 period simple, that is at 15,242. So yeah, that 15,250 to 15,200 range certainly doesn't seem like a bad place that if it can hold to be a good buy-in spot than to try and play for a bounce higher or to put on something like a put credit spread, right? To play for the idea that we at least maintain that level and that way whether we chop or bounce up, you can take a profit that way. Um, as for targets to the upside, that is a bit harder at this point, unfortunately, because of the battle happening with the ATR trailing stop on the daily chart. So unless you had jumped in earlier today off the lows, it's in a bit of a range where you're already kind of battling a level right now. If we can manage to break above this, of course, 15,500 is also going to be a level. You can see that right in this range where the ATR trailing stop and that psychological level I just mentioned is where we've stalled at both as potential support and resistance. So that could cause some issues. If we do manage to break above it, then we might be able to go higher. One second, guys. Sorry, one second. Okay, sorry about that. There's a car parked in front of our house, and obviously, with our due date coming up, I thought maybe it was like my mom or something. But last I knew, she wasn't in the state, so don't know who it is. But we'll see if they pop up. So, anyways, back to NDX here. Um, yeah, we're kind of at a price level right now. If we can break above it, then obviously the next bigger target to the upside, I would say, outside of course those $100 price levels to play into, would be around 15,800. That would be kind of where this price resistance was. Okay, I'm sorry guys. Give me one more second. I apologize. Okay. Sorry about that. Okay. So, yeah. So basically 15,800 might be a bigger level to play into, obviously. But personally, I don't know if I'd at this point would really want to take an intraday setup for today's expiration on Index, only because we're kind of at this level here. It's the same thing with SPX where we're kind of struggling in this range to see if we can break above it or not. So I apologize, guys, about hopping off the mic there for a second, but let's keep going and we'll pull up Microsoft now. So as soon as this loads up here, there we go. So actually, Microsoft to me doesn't look too bad either. Um, I don't know, Marcus, how you're looking at this other than outside the daily squeeze. But what I do like about this is we had recent true lows. We went down, tested the 100, attempted to break it for a second, but ultimately held the range. Notice how the Bollinger Band started to flatten back out. So when you have a true low and the Bollinger Bands, which were opening lower, right? You wait for them to flatten back out, and then usually that's a good time to consider jumping in. So if you had done so here, for example, or maybe off of this, once it confirmed breaking above the 100, you had a little bit of a spike to play to the upside. Obviously, we're kind of in a wedge pattern at this point with the 100 holding as support, and that's right in line with the 10 period simple and the 30 period simple acting as resistance. So there is that momentum is resetting towards the zero line. We have a consolidating signal here. That's not too surprising, seeing everything else like this as we're building into a squeeze. If we can manage to maintain the 100, then like I said, for a longer term buy, this might not be a bad spot to buy in. The last time we were down towards the 100 period simple and printed a true low, right? Both shorter term and longer term, excellent spot to jump into Microsoft. That was printing around the 250-ish level. And then we went up to 360, right? So over 100-point move higher off of that buy-in level. Let's take a quick look at the weekly chart, and then we can look at a potential trade idea. And Jane, absolutely, we can take a look at MVDA as well. We'll also go over EQT for a second as our $500 challenge trade. So let me write that down so I don't forget it. That's the one we just opened up yesterday. So on Microsoft here for the weekly chart, we've had a decent reset. Does look like there's still a few more weeks where if it wants a true reset to the zero line to test it, we might, have to sit through or maybe a month of still kind of chop and consolidation. But if it starts to pick up prior to that, kind of like what we've seen here, right, where it's on a full pullback, but it's pulled back enough to give us that next run, then we could start to get going again. I do like the fact that our bearish signal is attempting to cancel out for the week. Now, obviously, we'll want to wait until Friday to confirm that prints, and there it goes, right? It just flipped off. So would like to see that cancel out. That would kind of, once again, help with the thought process that the pullback that the weekly chart was looking for has sat move that likely the 100 period simple in the daily chart will maintain as support, and we could start to find a buy-in opportunity longer term. We also have a squeeze setting up, though. We know these squeezes can take some time to build energy, which once again leads back to the idea that we might be sitting here for a bit before the run gets going. Now, that being said, I would not blame you if you wanted to participate in a bullish move to the upside. Apple actually has a similar chart pattern where I decided to, start to build a little bit of a trade idea in. And if it pulls back, then I wouldn't mind building a bit more into that. But I would want to give myself time on this, just like what I did with Apple when I jumped into that earlier. So there's a few ways to go about doing that. First way would be to go out to something like the October monthly, right? Now, you could look at just jumping into a long call. if you want to. Um, let's see, the prior highs were right around the 360 range. So I'd probably keep my strike at or below that level below that level at this point on the call side. So something like, of course, the 345 strike, 550 cost basis currently gives you plenty of time to try and sit through some chop to look for that bullish strength to the upside. If this is a higher risk than what you're comfortable putting out there, I completely understand. You can always narrow it down to a spread, for example, and do a vertical spread or some sort of broken wing butterfly, right? That way you can reduce your risk. But if the move starts to happen more quickly in your favor, both the vertical spread and the debit broken wing butterfly, with how it's set up here, should allow for that profit to be obtained a little bit more quickly compared to a standard butterfly, for example, right? That might be harder to obtain that profit given how much time is on this trade. So I don't think this necessarily looks like a bad setup. Um, I would personally prefer to see a pullback down into the 100 it holds for that entry, or something like a bullish divergent bar, right? That gives me a good probability that it will follow through with that quick higher high, if not get the run going itself. Um, so, being right at this level makes me a little cautious. You might time your entry off of an intraday pullback. And then if that pullback looks like it's holding, if everything still looks valid, I'd jump in. The second thing I'd be mindful of, though, is to probably not go with your full risk tolerance immediately, right? And what I mean by that is, let's say your normal risk tolerance is $500 per trade. Well, then I probably wouldn't jump into this 345 strike as a long call, right? I would probably lean towards the vertical or some sort of debit broken wing butterfly like this. That way, it's just a portion of my capital risk. And the reason why I'd look to do that is because if, for example, we get a stronger pullback down into intraday, into daily support levels, one, you want to confirm that that 100 period simple is going to maintain support, right? You don't want to see it falter. If it falters, then it, to me at least, let the trade idea, and you can put it back on a watch list and keep an eye on it and reevaluate it at a later time. But if it pulls back down into this range and holds, then you can build in at a much better price point level, right? At a better underlying price level, into your normal $500 of risk tolerance. And you can do that, of course, by adding on to the trade that you hold and cost averaging it. You could do that by, maybe jumping into a long call that's a little bit closer dated. Doesn't matter how you necessarily want to do that, but the idea is that you're building into the full $500 of risk tolerance for that trade idea at a much better price level compared to doing it here at resistance. That's the only thing that's cautious. And of course, if it starts to break above resistance later today or tomorrow, you can still build into the trade idea, right? And do it off of that confirmation it's breaking. But to open something right at resistance, even though I do really like this setup overall, I don't think it looks bad necessarily. I would still be very mindful of my risk and just use a portion of it. That way, it gives me a little bit more flexibility. And of course, heaven forbid it pulls back and it really breaks to the downside instead. Well, then I'm managing a much smaller risk than I would if I put the full risk tolerance, the full $500 here to try and play off of. So I don't think that looks bad whatsoever. But kind of a tough spot to immediately take action on this today. So I'm actually going to star that one. It'd be good for a short-term watch list to keep an eye out for. Let's pull up MVDA here next. So here on MVDA, this one's a little frustrating to me because I was trying to play it through earnings. It got exactly the pop I was looking for on this and then immediately pulled back on me. It wouldn't the market makers wouldn't fill me on the profit I was looking for, which was unfortunate. But, of course, if I had given it just a little bit more time, we'd be right back at that level. It was a great pullback into support. Support held. We had a bullish divergent bar the other day. This honestly wasn't a bad entry to jump in. My caution was I didn't like this price resistance here around 480. Not to say you couldn't have played into that level, but you're pretty close to it, right? And you always kind of want to be mindful of price support, price resistance. Sometimes that can win over everything else on the technical aspect that you see. And we've seen quite a bit of that this year. And so it's something that I wanted to be a little bit more cautious of. But that being said, if you did jump in there, right, trying to play it long, that news came out that they're partnering with Google the other day. That obviously helped get the follow through on the bullish divergent bar for the higher high. We had the low compression squeeze that's starting to fire. You have the momentum building up. This is technically a consolidating signal. It canceled out a little bit too soon before the trend went back into a bullish trend. But we did have the recent true lows. So once again, if you jumped in off of those, gave yourself time, starting to look good. Now, of course, $500 is going to be a psychological level. That's right where we gapped up on the earnings announcement and pulled back. The difference, though, between what happened around earnings versus what's happening now is one, we're past earnings, right? So we're past all of that nonsense, if you will. The Bollinger Bands are definitely flaring open. The trend has turned bullish, right? Before off of earnings, we were still technically in consolidation. Momentum's continuing to pick up off the zero line with plenty of room to move higher. So there's a lot of room left for this move to continue. And then our low compression squeeze is starting to fire. So it has that energy behind it to try and take it to the upside. So overall, I don't think this looks bad. But for me personally, being at 500 as a psychological level, on top of it not being near support, right? This was the day for me to jump in, or at least yesterday at the open when it was confirming it was holding support. That would have been the entry point for me to try and jump in and at the very least take it up into 480, if not for the higher push to the upside like we're experiencing. From a weekly perspective, let's take a quick look at this in regards to exhaustion. And Marcus, not a problem. So, beautiful bounce. It basically did a really good job so far this week holding the 10-period simple as support. Bollinger Bands are still opening to the upside. This is still very much a bullish trend. We are, though, pulling back off of the top of the axis. And so that always makes me a little cautious. If we can't manage to strongly break above 500 and see that act as a support level, then we might actually find ourselves going back into a bit more of a choppier range. Remember, for momentum to reset, you don't need a strong pullback in the price for bullish exhaustion, right? All you need is chop, consolidation. And consolidation can allow momentum to get that breather to reset itself before it tries for that next leg higher. Now, of course, this could be a case of where it acts like a small pullback and then tries to continue. I do like the fact that we've already canceled out of our pullback signal, right? That helps the bulls arguably more than the bears. But this hasn't turned into a bullish signal yet. It's still more a consolidating signal overall. And we don't necessarily have any green bars starting to appear to say, hey, this literally is, kind of identifying itself as a short-term pullback. Let's try and get the bounce to continue the trend. So once again, hard for me personally to do anything off of the 500 level where it's at right now, still given how that weekly chart kind of looks. I think there are other tech companies that look a little bit more clean on the setup with their daily and weekly charts. But once again, MVDA has been a bit of a beast this year, continuing to the upside. And with the daily squeeze attempting to fire today with the room on momentum, it could easily keep going. If you're already in something, then I would say don't hesitate to take profits, but you might consider leaving a runner on, right? For myself, though, for not being in anything currently, I would prefer to get a pullback or consolidation on the daily chart, something like this. And then if it holds, use that as an entry to play for the next leg higher. It's really hard for me to jump into a new trade way up here because it's almost a case of FOMO, right? Where I have this fear of missing out on the move that already happened, especially, with myself considering what happened around earnings. I have a fear of missing out on this move that I was already looking to see occur. And so it's almost like I'm throwing my money at the wall, hoping the market makers will keep that run going. So if I were to really play off of that FOMO, which I know sometimes people do, and sometimes it works out, right? A lot of times it doesn't, though. But if you were to really want to play off of that feeling of FOMO because you're missing it, once again, it's a case of kind of like what we talked about with Microsoft. Take a smaller portion of your normal risk. That way, one, if it breaks back down and we find ourselves in chop and 500s holding, you're managing a much smaller risk, right? You're not managing your full risk tolerance. But two, if it pulls back, holds support, and everything still looks great, much better spot to then build into the trade to play back into this range, if not higher. And then, of course, if you do put it in a little bit of capital and it keeps going, then well done. You're in the game at that point. But I'd say this is a bit tricky of a spot for me personally to want to try and go long on this at this time. And then let's pull up EQT as well. Of course, Jane, not a problem. So EQT here is another one that we jumped into for the $500 challenge yesterday. The reason why we jumped into it, or that I liked it, is we had pulled back into the 30. The 30 was maintaining support. We made a nice bullish divergent bar with a bullish signal starting to print on the compound breakout tool in a squeeze. So overall, the first thing I was looking for here was to see if we could follow through on a higher high, and that's happened, right? So arguably, we could look to close our trade here, scalp the small win, and then move on to a new trade setup. But the second reason I jumped into this trade was to see if we could go back up towards this $44 level, if not maybe a bit higher, right? And I say 44, you can see my alert slightly shy of that at 43.90, to see if basically we could go up and test this price resistance range. Bollinger Bands are still relatively flat, so I don't necessarily want to play a trend move off of this just yet unless things change in the narrative, like the Bollinger Bands start to flare open. But given our strike that we hold and the time that we built into this trade, if we could go up and test 44 by the end of the week, it should definitely allow for a quick profit, close, if not above 100% return on a risk, right? Based on how the option chain's currently pricing everything out. And so that's kind of my target to the upside I'm looking for. We'll see how this looks into the close. I don't necessarily plan to hold this trade past Friday, right? I want to see if we can get up into that range prior to the, and I don't think it would be out of the question to do so. The nice thing about what's happening on the chart currently, other than, of course, we followed through with the higher high on the bullish divergent bar, is that we have bullish momentum now picking up off the zero line. So that helps us out. We continue to print a valid bullish signal on the compound breakout tool. That looks great. We still, of course, have energy behind the squeeze, and our trend is bullish with today's low in the open, holding that 10-period simple now as support and stair stepping up. So that looks great. If it can look like this into the close, or we continue to move higher, then that should benefit us, ideally trying to test that 44 price level by the end of the week, and in turn allowing us to lock in a profit. I did technically go out to next week for this trade because I, wanted to protect some against theta decay in case it continued to chop in this range. So going out to next week kind of helps protect against that theta decay. But like I mentioned, with it being a holiday week and everything else, I don't necessarily want to hold it through the 3-day holiday weekend, because on something like a long call, unless you really give yourself time, like going out, like what we talked about with Microsoft, right? Going out to October, if you're doing something for next week's expiration and it's a long call, if you don't get the actual price move, underlying price move you're looking for, then it might get hurt by that theta decay, which is why I mentioned at the start of the session, things like credit spreads, unbalanced butterflies. Those are typically really good strategies to hold through a overall holiday weekend, where you have that extra market day where the market's not moving, But the theta, of course, is still working either for you or against you in your favor. So that was a EQT. Still like that setup. Corey, if you can hear Taylor, you might have his room open because I don't hear him on my mic currently. So you might have a different room open in the background that you don't realize, and that's why it's coming in. Evelyn, absolutely, we can take a look at AFRM. Let me pull that up now. And then Real Keel's asking, I was confused because you updated EQT as a pending order to buy on a retrace. Can you clear this confusion? I did have some corrections that I had to send out on EQT because I had typos yesterday. So I do apologize about that. But if you see in every alert that I did post, right, even the mess up ones to the final correction, I mentioned that the trade is filled. And certainly when it's a $500 challenge trade, if you ever see me post it over on Twitch, on Twitter, and you pull up Twitch to get the, view of the symbol and the account and everything, I did show that it had filled. So usually the only time you'll ever see an open order for me get posted into the alert section is if I'm using the profit recycling strategy and I've placed a cover order out there. Otherwise, the majority of the time when I send out an alert, it's filled. So I don't wasn't necessarily looking for a retrace on that one. We just jumped into it. So I hope that clears the confusion. So I mean, if you missed it, don't worry. There's always going to be another setup. Like I said, Microsoft looks pretty solid, so maybe we'll look to jump into that. But yeah, that alert and trade has technically filled at that point. There are just a few typos with it. Like I put, I think I'd had initially said to close when clearly it was an open order and things like that. So I apologize, Real Keel, for any confusion there. But it won't stop us from, of course, looking for new trade ideas and jumping into them either. So don't feel too bad if you missed out, right? No case of FOMO for that trade, I'd say. Just skip it and go on to the next setup. Another setup that I like that I'm currently in, we'll talk about AFRM, but another one that we'll talk about here in a second is a DHI. I think that one also looks pretty good. So we can go over that too. For AFRM here, so let's see, we had a pullback towards the 100. The last time we had a pullback towards the 100, we also had the true low print, very much like this current time. Both allowed for a nice short-term run up. It looks like we're attempting to break price resistance. Price resistance is right around 1970-ish. So you can see we're attempting to break it, but we're still kind of in that range. I do like the bullish sentiment down here with the compound breakout tool, with momentum crossing above the 0 line, the 10s getting ready to cross back above the 30. So when that happens, that will be of a bullish strength here. Bollinger Bands are definitely flaring open. But once again, price resistance is always a tough place for me to try and buy in. Obviously, we're nowhere near support to have jumped into that trade. And though the Bollinger Bands are flaring open and things look good, we saw a similar case of that back here, right? When the Bollinger Bands were flaring open, you had the momentum in your favor, you had the compound breakout tool. Here, you actually had a squeeze. And then what happened, right? Well, price resistance won over everything else. This is a great example of why, whenever we talked about NVDA, as much as I think the technicals look good, it's hard for me to necessarily jump in at a price resistance or like a psychological level like that when we're nowhere near technical support either to kind of help keep us stable at that level. So once again, I probably wouldn't do anything on this today. If we confirm that we're starting to break above it, then you could always look to play catch up on the move, right? Maybe once again, maybe with a smaller risk, but with the room on momentum, try and play higher. Unlike NVDA, I'd say the difference here as well is the squeeze is already fired, right? So you don't have the energy from the squeeze to kind of help you with that boost compared to NVDA. Let's take a quick look at the weekly chart. And as for a target, Evelyn, I mean, if you already have been long on this, then right in this range, I don't think is a bad spot to consider profits. And as you can see here, a weekly chart really hones into that idea where for the majority of this year, we've been in consolidation. And arguably, we are right towards the top range of that resistance. We did have a slight higher high here up into 2275. So if we can start to break and hold above 20, I would say that's probably the next target to the upside is the highs of the year. And then ultimately, if we can break above that, playing into the 100 period simple on the weekly chart, which is currently at 37.15, wouldn't be out of the question. Keep in mind it's pointed lower. So by the time we, stair step up to meet that price, it might be closer to 30 or something when the two meet. But that would ultimately be the next technical target, the weekly chart. I do like the bullish sentiment here. I like the squeeze. But once again, we've had situations where we were in a bullish sentiment, like here, right? You broke the ATR trailing stop. The Bollinger Bands appeared to be starting to open up. Momentum was crossing above the zero line, bullish signal squeeze. All of that would have had me look at jumping in. But then what happened? Price resistance won over everything else. And then we had to pull back and went right back into chop. So be very cautious about this level. If you're already in something, like I said, I wouldn't say there's any harm in taking profits. If you have multiple contracts, then you might consider leaving a runner on to see if we can actually get the trend move going. But for me personally, if I was in something from a lower price level, we'd basically be at the first target now. So what would trigger a short squeeze and a firm? You mean like the shorts getting pulled out? If more buyers came in, right? If more buyers come in and forces the shorts to close out their trades, that's going to help with a short squeeze fire to the upside. Which is possible. I don't know what the short interest percent float is on a firm currently or anything like that. But that could help it get it going. Otherwise, though, with how that weekly chart is just starting to set up, the squeeze on the squeeze pro, that's another reason to kind of be mindful, because if it stalls here and pulls back and goes right back into the chop that it's been in, that would actually help the weekly squeeze build up energy before it takes off in one direction or another. And so once again, that's kind of where the caution lies with us being at price resistance. We could easily break it, right? There are clues telling us that it wants to be bullish. But I've seen one too many times traders, and including myself, right, jump in at a price resistance or price support level, and then that wins over the other technicals. So for me, if I'm sticking to my rules, it would be a sit on my hands and wait kind of situation. And then last but not least, because I mentioned it really quickly, DHI. I think this looks like an interesting setup. Now, of course, we have to be mindful. This is a home builder, right? So obviously, it might get affected by any sort of housing news that comes out and reports and things like that, as well as interest rates. But I think this is a pretty interesting setup from a technical point of view, which is why I like it and I jumped into it. Yesterday, we had a nice bullish divergent bar, kind of like both Apple and Microsoft, like we talked about earlier. It had a great pullback into its 100. It held it as support. The Bollinger Band started to flatten out over the last couple of trading days. We've had the true low signal, which can make a great buy-in spot. The last two times we've had true lows print, if you gave yourself enough time, you had both the shorter term run to the upside, as well as, of course, the bigger picture trend point of view. We're finally starting to confirm exhaustion here, so that really works in our favor. We are getting a bullish signal on the compound breakout tool, so that's a good sign that we've broken above the 10. That will go up and try and test the 30. If we break above the 30 and this remains valid, then we'll likely test the ATR trailing stop. And of course, if we break above the ATR trailing stop and this is still valid, then it's turning into a bullish trend signal at this point. The other reason, though, why I like DHI is because on the weekly chart has also given us a true low signal off of the pullback. So not only do we have a true low signal on the daily time frame, right? But we also have a true low signal on the weekly time frame attempting to print for the week. Now, once again, we'll have to wait until Friday to see if that remains valid. The good news for those of us who are in this and are bullish or considering it is the daily true lows are definitely valid, right? Those have already printed. But obviously, if we could get the weekly one to print too, would be great to see. That would only help us out. Now, momentum's still resetting. We still haven't canceled out of our signal here. Bollinger Bands are still kind of in consolidation, so we want to be aware of that. But we had a nice pullback just shy of testing the 30. It's starting to hold up. So at the very least, even if it went up to retest the highs here, that should definitely allow for a profit. And of course, if you give yourself plenty of time, you could try and play for a bigger move on the weekly chart or maybe build into a trade idea. So overall, DHI, I think, looks like a pretty good setup to where if you're not in it, give yourself some time on the trade, at least to October, if not further, but it might be one to consider jumping into. Now, obviously, I jumped into this yesterday off the bullish divergent bar over in the small account mentorship room. So for those of you who are following along with that trade, right, we are already setting up ourselves for a nice profit today. For those of you who are looking at this as a brand new trade, maybe look at the intraday charts to try and time this, right? I still don't think this would be a bad entry spot from a bigger picture point of view. It's not like MVDA or a firm where it's, way above its support levels and, it's at price resistance or anything like that. So I don't think this is still a bad spot to enter the trade. But you might try and time it off the intraday charts to see if you can get, a little bit more of a entry off of a support level there to then try and play for the bounce. And once again, like I mentioned, give yourself time on the trade. Absolutely. But that is my time today, guys. And hey, Afan, good to see you. That unfortunately, this is when I need to sign off. So thank you guys so much for joining me. As always, may the trade be with you, my fellow Jedis. And I look forward to talking to y'all again next Wednesday or Monday, ideally, for the Monday market update. And then, of course, for anyone in the small account mentorship room, I will be back on the mic later today at 1 o'clock and look forward to talking to y'all then. Bye, y'all.